Check, check, check. Oh, hey guys. Spike, I just mean like AMD, NVIDIA, whatever stock name I should have said. Sorry. Not a very good use of words. My bad. Yeah, if there's something you want to go over, otherwise, I'm going to go over a few big tech names and a few names that I'm looking at as well. But I don't want it to be about me. But if there's no requests, then I'm going to go. I'm going to go over some things I'm looking at. But yeah. Orient, good evening. Glad to have you in here. yeah, Spike NVIDIA. NVIDIA made a run, but I got my eyes on it as well. Xlean Exxon as well, for sure. We can definitely do that. Exxon's a nice one. A lot of people kind of forget about that name, forget about that sector, but it moves very nice. It pays really well. Swings and day trades. Man, we got 5 people in here. Did football must start this weekend, huh? Either that or they don't like my lectures. Yep, definitely look at Spy Marina for sure. But lecture doesn't start for one more minute. We'll give it a little bit. And I'll do one more premium tag and we'll get rolling. All right, guys, one last tag. And I guess it's just us. Hopefully there's 7 people in here that learned something tonight. Well, welcome in, you guys. My name is StartedWith for you guys that don't know me. We're gonna get diving right in. Spike, do I ever trading view? I don't. I hear good things. The people that use it do like it. I hear good things, but for me, I don't. I'm on Thinkorswim, kind of half the time. I still trade on Webull as well, but Thinkorswim charts are just really nice, really great. So, but yeah, let's dive in, you guys. First thing we're gonna do, we're gonna look at SPY. Obviously, red line here. We're pushing, we're teasing, we're close to those all-time highs. We're not there. We're pushing, but I think it comes soon. As of now, there's no reason to think we can't go get that. There's no reason to think that. How big of a move are we looking at percentage-wise? I mean, shoot, 0.5%. We're putting in 1% days all the time, and so something to think about here, you guys, as we open up the week, start the week, stuff like that. You can see I already have an alert set. This is me preparing for tomorrow. We pushed up against this 561.45 zone here. It's that zone from early to mid-July. And so, if you know anything about charting or building a trade plan, old resistance is now support. And so old resistance kicked us down, resistance rejected, but ultimately on Friday, we closed over. And so the game plan for me, the game plan for you all should be, if you guys, like I always say, if you're new to charting or not go charting, what you should plan for, look for tomorrow is 546.45 zone here. Again, this is on the 1-hour chart. So this shows us a lot of information of what to look for, how to trade it, trade around it. To me, you buy dips into here. And so a zoomed in look, you always hear me say, if we kind of trickle into here and we kind of fake sell and this price alert triggers, somewhere down, 561, even as far as 561, that we start seeing. So if we got these wicks here on rejection, if we start seeing wicks like this, doesn't have to be this long wick, but big wicks on the bottom, that's going to tell us that buyers are there, they're parked there, they're ready to defend 561.45. Okay. We could push all day tomorrow. We could reject all day tomorrow. We could range. Typically, I always learn from ever that Mondays are usually, a ranging day. Yeah, we might push up to 562, 563, but we might reject as well and kind of keep in this a little box of a range. And so for me, as I start my Monday early in the week, it's upside moves. It's pretty simple. Upside moves is buy dips 561.45 until it fells you. Obviously, if you buy a 560, 562 call, whether it's 3 days, whatever, and we start holding down here, we start pushing down under 561, just because I said buy dips, on the Sunday night market scan doesn't mean hold. One case says buy dips. It's no, you buy dips and then you play, you zoom in on a tighter time frame. Okay. And so, now we're on the 5-minute time frame. So you buy dips here and it's like, okay, we caught the bounce. We're defending. We're over 562. Okay, where do I sell at? Immediately, what I'm going to say, or how I trade is look left. So this is Friday's price action here. Okay. So you bottom tick, say, I'm just going to make up a number. Say you buy the 562 calls for 110 bucks, $1.10. Okay. So you bottom ticked, you didn't see any red, you're pushing up. Do not trade on your percent. You trade based on levels, you trade on zones. Okay. So as we come into this 562.40 to 562.50 zone here, immediately you need to start thinking, hey, I should be trimming into this zone here. Okay. You don't look at it and go, okay, I bought the bottom, I'm going to hold for 400%. That's reckless. That's stupid. You never do that. You always trade based on the chart. So again, we get a dip down into here. We push up this 562.50 because look at this price action from Friday. Push up, but ultimately fell. Rejection. Push up, hard rejection here. Push up, didn't quite make it. And then right at the close, we pushed up and we closed there. Okay. So to me, 562.50, if we open down here and push, that's definitely what I call a PT, a price target, profit target, whatever you want to call it. Price target one, or a big one for me, to sell all and leave a runner, 562.50. Okay, guys, does that make sense to everybody? On the chart, what I'm seeing, what I'm saying on that. But yeah, one thing to note here, on why it's safe, why we need to be a bull, so to speak, is, other than obviously down here, August 5th, earlier this year, it's like we're running in August. Thursday, sell down. Friday, we bought it back up. Okay, so bulls are in full control until, we can day trade puts down here, but like long swings, you want to start seeing multiple day rejections down here and hard selling pressure down here before you even think or want to start swinging some puts. And so one thing to note, SPY did not make new all-time highs. Neither did Q's. I'm going to get back to that, but stick with me here. So Q's all-time highs is somewhere up here. But RSP, you guys, I got this from Tilio this year, or all of you guys should have got this from Tilio. RSP is the S&P 500, but equal weight. So for you guys to know what that is, the S&P 500 right now is, it's the 500 largest companies or whatever, and it's all the weights are not equal. So Apple, Microsoft, Amazon, I think are the leaders. I'm going to look this up really quick while I'm saying this so I don't lie to you guys. All right. So top 10 holdings on the S&P 500, Apple, 7%, Microsoft, 6.7, NVIDIA, 6.2. Okay. So what I'm getting at here, guys, is RSP is equal weight. So generally speaking, Apple's equal weighted. We've seen Apple with 7% on SPY, but on RSP, Apple is equal weighting, generally speaking, or very close to NVIDIA, to Microsoft. And so what we're seeing here on RSP is it's pushing a little bit harder than SPY. And so what that tells us is the rest of the market is participating. The rest of the market is moving. So, sometimes we'll see a big push on Qs and hard selling on XLE and XLF as an example. And then we look at SPY, and SPY will kind of be sideways during the day. We're like, okay, why is SPY not pushing? Qs are going. Obviously Qs can outweight those, but something to look at if we get sideways on SPY, sometimes take a peek at RSP and say, hey, is that sideways as well? Or is that down as well? Or is that pushing? Are we getting a market participation by everything in a market? And so RSP is something to watch, you guys. I'm not seeing you can trade it. I'm not sure on the liquidity on it, but something to keep an eye on is RSP. We're pushing. We may do all-time highs, I believe, on Friday, and we're pushing nice. And so this tells us the rest of the market, not just tech, because tech is so heavily weighted on SPY, that the rest of the market is on this rally. And so there's no reason to just try and short these pushes all the way up, like puts all the way up, puts all the way up. It's like there's no reason. You can buy or you can day trade puts on some hard selling when we get it, but something to always watch is the RSP. Qs, you guys, I'm gonna go over, and then I'm gonna get into the names that you guys are requesting. Nope, I don't want that one. Q, something I'm watching here. A little bit of a trend line. It's not perfect, but something I'm seeing here. All-time highs here, early July. Thursday push up, ultimate rejection. Friday, a nice bounce where it should, 475.56. If you guys only have one immediate line on the chart, 475.56 should be it on QQQ. But just something to watch as we come into Monday, Tuesday, Wednesday here. We start pushing and breaking over that 482, to be safe, 483. We start pushing, getting holds over 483. Things are looking nice for Qs. Okay, I'm not saying be bearish, but we keep pushing up and rejecting. You can with confidence, you can take some puts of this rejection to this 482 zone, 4250 zone. Always look big picture on building a trade plan or where to take profits. If you take a dip buy and you sell, you're 120% up here, and then you go to that work meeting, I always say, and you come back and you're down at 20%. To me, that is just not very smart trading. Okay, so something to note here on some Qs. Okay, does anybody have any questions on Qs? I don't spend too much time on it before I get into some other names here, because we got a couple of requests. I want to make sure we get to them all. All right, I'm gonna go in order now, you guys. I think NVIDIA was the first one. Yeah, Spike wants NVIDIA. First little disclaimer, you guys, NVIDIA has earnings on Tuesday or Wednesday, so always know that, always be aware of that. My disclaimer, if you're trying to play NVIDIA earnings, do not buy like a 150 strike that expires in 3 days. Don't buy a 155 strike, a 160, because you're gonna say, well, I bought it because that's all I can afford. That is very foolish trading. What you can trade is, if you want to play NVIDIA, SOXL or AMD, okay? Or what's the other one people, is it SMH? So SOXL, SMH are ETFs. They're ETFs like SPY or QQQ. They're a basket of stocks. This is a basket of semiconductor stocks. So inside of here, AMDs, your NVIDIAs, probably your TSM, I think it is, probably in here. SMH, same thing. So play the ETF. So same thing, if you were to play, say Netflix and Apple and NVIDIA all had earnings on the same day, you could take a QQQ call or whatever if you thought you're bullish on those names for ER, and you won't get the theta or the IV hit on those, or generally speaking, a bad one, because you're not playing those directly. So you can play these names instead of NVIDIA. Okay, you guys, so do not play NVIDIA wild out of the money strike, 150, and say NVIDIA pushes up to 140, and everybody that played these and listened to me, listen to other people, they're profiting, they're having a good time on those gains because NVIDIA shot up to 140, 141. Your 150, even though it moved up, your 150 is probably going to be worthless, you guys. So do not buy a stupid, way out of the money. If you're bullish on it, do not buy a 150 call or a 160 because, hey, it's cheap, it's all I could afford. Buy SMH, buy SOXL. SOXL is super cheap, you guys. SOXL is trading at 40 bucks. You can get a 41 call at the money with time. No stress on that, you guys. Okay. All right, Spike. I'm a little biased. I'm a little bit cautious on the move because I bought the fear in August. I got shares down here. Not bragging, just saying I did. I bought this fear down here at 98. I trimmed most at 123, And I'm holding a few here. It's a long-term position here. It's a position in my Roth, but full disclosure, I trimmed because if I see, I think this was like a 35% move for me, whether it's a long-term or not, 31%, 32%, whatever. If I'm seeing a 30-something% on a share flip, I'm taking it. I don't care if I'm intending to hold for many, many years. But let's take a look here. NVIDIA 1 hour chart, you guys. I got a shaded area. Shaded areas. I'm not going to say it's supply because supply is kind of a term that is thrown out. People don't use it correctly, but to me, if you were to call it supply, supply is a big overhead zone where there's a lot of sellers. There's a lot of orders waiting to be sold here. A lot of sellers possibly, and demand is down here. The opposite. Demand is a lot of demand. Like, is there demand at 100? Yes, there's lots of demand. Obviously at 100. Is there a little supply? Is there some rejection here at 130? Yes. Obviously, earlier, this is July. You can see we broke under 130 in July. It had trouble and ultimately sold down. Okay, last week, what did we do? 130 rejections, 130 rejections. Friday didn't quite get there. So you already know my immediate thought. Okay, Spike and other people want to play NVIDIA next week, day trade it, swing, whatever you want to do. Be cautious, like to me, a one-line chart, 130, obviously earnings will dictate what it does from here, but day trades, 130 is what matters to me. We push up, we get some closes over there, continue to be bullish on it. Okay, we start trickling and we kind of get some choppiness here. It's like, okay, you're 10, 15% up, 20%, whatever it is, you're not getting the breakout you wanted. Now you got to have decision time. Okay. Like I said, I think Wednesday or Thursday, probably after hours is earnings. So it's like you tried to play the breakout, we chop around. Now, do you swing, because your trade plan didn't work out, or do you swing because you're reckless? Whatever it is, you got to make that decision. Maybe we break out and you're like, oof, I'm glad I held those 132s. I'm in profit. But if NVIDIA just has something on their call, we know that they're a good company, they're a strong company, but it doesn't mean they're going to go up during earnings. Probably they will, yes, but no guarantees. And so you guys have to have a plan on NVIDIA, like I said, because if we don't get this move over 130 this week, we know what it can do or what could possibly happen. Okay. On the downside, day trades or dips to buy. 124.56 ish and 123 flat. You see the big reactions when we get there. So for me, and until it fails us, these are dips to buy on NVIDIA. Obviously, earnings can gap down. That'll change our trade plan. We'll have to figure out a new trade plan under 123. But assuming or just pretending that NVIDIA earnings were not this week, this is a really, really nice range to play off of. And so a zoomed in look here, since you guys are probably like on your phone, holding your phone, whatever it is, a zoomed in look. We can buy dips tomorrow, day trades. I would say safely 128.4 to 128.5. Where did I get that? That was a spot over here. I don't know why this always resets. If there's any smart people in here, this time access, I always put it low so I can push this over here to show you guys the chart, and it always resets. Anyone's smart, let me know, DM me. Dips to buy. 128, what I say, 128.4 to 128.5. We'll just draw a line to have it make sense for you guys here. So this is Friday's price action, you guys. We start pre-market trickling down into here. I think these are safe dips to buy because we have this price action here. Okay, you don't buy puts here after people bought puts at 128 and they're selling here. You buy call dips here because also this is the hourly 20. It's going to trickle in here. This, assuming we're kind of flat, it's going to trickle in here something like this. And so if we push pre-market and we push up, we come down, you buy dips into here, you buy the 29, 130 calls, whatever it is, you buy those dips for a day trade and you take it into 130. Okay, you don't miss this move here and open at 129.74. Yeah, you might get a 25-cent move. You might get the move, yes. But again, you take calls here at the open, You get 25-cent move, you don't take it, whatever percent that might give you. 25 cents move, not 25%, sorry, 25 cent on the stock. We reject hard, and now we're all the way down here. Now you're deep red. It's Monday morning, it's your first trade of the day. It's 30 minutes after open. You know, you took calls on a zone that's rejected multiple times, okay? Yes, we might get that breakout, but for me, I'm not taking calls right here. What I will do is break out, retest, take calls here, yes, okay? And then, you know, a loose stop would be Friday's high, you know, 129.6-ish. You know, you might need a tighter stop depending on how much time you bought on that. But that would kind of be my game plan. Again, I'm cautious to be bullish up here just because of the move it's made right into earnings at a big level. Market makers are really good about doing that. But yeah, the 138 spike, I don't know, what is that delta? I don't know the expected move on NVIDIA. Hopefully that can pay. Hopefully that's some time on it. But again, a 138, you're going to need that move. You know, if you take that, you know, say you take that Wednesday, you're going to need that pop Thursday over one. You're going to need 139 open 140 to get paid on that, because you're going to lose that. You're going to lose the IV crush Friday morning or whenever earnings is. So hopefully that answers your question. XOM and XLE, kind of the same thing. Same sector, that is, not same thing, same sector. Let's take the 4 hour. Let's look at where we're at, you guys. Let's look at where we're at. XOM, very nice range. And I guess you guys, I should have said my perspective tonight, unless I mention it. This perspective is for day trades, for day trading. If anybody wants swing ideas, ask me to clarify, or I can go into it. But I'm a day trader 99% of the time. And so these are ideas for day trades. But I will touch on some stuff on some swing trades. But for day trades, 117 is our ceiling on XOM, because we can see when we push and reject below 117, we see the reaction below the rejections, below 117. Over 117, what is our reaction? We see it up here back in July 16th. Over 117, we see the reaction, So again, and also this purple kind of stair step line is the daily 9 moving average. So you see people, or you hear people trade the 9, the 20, the 50, and the 200 daily moving average, not EMA intraday, daily moving average, daily. So the 9 and the green is the 20. So those are stacked above you. So right now, you guys, again, take calls with caution, but 117 is resistance, and your daily 9 is resistance, and your daily 20. So you have 3 things that are overhead that you got to think sellers are going to be parked there. Okay. Can we push? Yes. But you bottom tick call somewhere around here, you're up 60%, whatever it is. You buy 10 contracts, you better be selling 8. For sure. There's no way that I catch this move up to 117 and I'm not taking a trim up here. So again, I always say you play the chart. I don't care if you chased here and you just bought in and you're only taking a 5-cent move. You better be mindful of 117, okay? For me, until it breaks, 117 is our ceiling resistance. And 113 to 113.26 is our floor. So a big wick, okay? Not only do we mark levels, you guys, and just say, that's a big level, but when we see this wick right here I'm on the 4 hour, but this buyback here, if you guys can see this, if I'm zoomed in enough, like not only that, is that a bounce, that is a huge bounce on the 4 hour time frame. You need to look at price action stuff like this around big levels and go, wow, buyers are there and they're there a big time. You know, you don't take puts here and get smoked all the way up and then swing and go, okay, maybe I'm down, almost break even. Okay, you don't take puts, you take calls at 113.26 until it fells you. Okay, does that make sense, you guys? Look at price action of candlestick charts, not only in your charting, but like when you see like consolidation zones here, when you see big wicks here, like that is a big wick. That is saying huge buyers, big buyers are present. When you see this stuff here, the opposite, big sellers pre-market. Buyers try to push up, what they do? Huge sell down, big sellers, big sell down wick. So when you guys, little, quick little dummy lesson on price action. When you see those candles, you mark those lines. And that's why 123 to 123.26 is my floor until not. So a very nice $4 channel, $4 trend, whatever you want to call it in here, $4 range. And it goes back, look at this. This goes back to April, all the way back to April, all the way back to March, you guys. So look at this reaction here at 117, reaction. Okay. And so everybody wants to play the breakout, time the breakout. No. So Exxon, swing ideas. Okay. We push up, we reject. But you got November calls, so you're chilling. We push up, we break out. Okay. You ride those calls now till these zones up here. But if you miss this move, what do? You buy the retest, because now you have these moving averages. They're going to curl underneath you. And now those are underneath you, and those are your support. So shout out to Lena. I don't know if she's in here, but she's a super good swing trader, you guys. She posts charts and trade ideas in staff ideas tab. She catches these moves here where you see this consolidation, and then she catches these multi-day moves here. So again, that dashed line, you can see that that's overhead right here at 117. That dashed line is what you see here. Okay, and this price action from February. So when we push over 117 and these lines curl, that is going to emulate, sorry, this scaling is not friendly with me right now. Getting there. That will emulate this zone here is what we're trying to do. So when you see, breakout or push up rejection, push up rejection, push up rejection, and we get a breakout and a long move, that is what we're doing as a swing thesis on Exxon. So if this level here, you guys, pretend this level here, this 104, 105 zone is 117, that's what we're looking to try and do if you want to be a long swing on Exxon. You like the name, you like the chart. That's how you catch these long swings, you guys. You catch the breakout retest, you buy time, you ride the trend. Okay. Spike, does that answer your question? Exxon, and then we'll take a look at XLE. Get some water. Hopefully, again, you guys, everyone's trading style is different, but to me, I'm just telling you about what I see, what I want to do. XLE, slightly better setup, slightly not better setup, but if you want to be a swing trader, that is. So definitely a trend line to watch here. Not that moving trend lines, but this trend line is done. So I want to look at something here. And now a zoomed in look. We're on the daily, and I'm going to zoom in, you guys. So we're on the daily. So what did we just talk about on XOM? Getting the moving averages to curl underneath us. So what do we have here on XLE? We got the 200-day underneath us, 200-day moving average. You buy calls off that every single time, whatever stock it is, you buy the bounce there. We got the 9, which is the purple, curling. We got the 20. We got a trend line. We got 4 things working in our favor, you guys. Okay. So now, let's slap a line on here. Something that stands out to me. 89.50, I didn't quite get it. 89.47 for Spike. Anybody else following along? So this is the daily, a 1-line chart, why it matters. I'm going to zoom in. You're going to see why 89.50 still matters. So again, you guys, we got the moving averages curling underneath. We got this breakout candle on Friday, and we got a trend line. We got 1, 2, 3, 4. We got 5 reasons, 5 things to be bullish as a swing thesis. Okay, so you need to find reasons why you're trying to be bullish on something. Why you want to do that. Okay, so again, the 200's down here, the stash line. The 9 and the 20 are stacked. So this is the 15-minute time frame now. So these are going to open somewhere around here. These are going to be stacked. And we got 89.47 with us. Okay. So if we open down here below this, you have to say, okay, I got these 2 moving averages stacked as resistance. We got this zone here that's going to be resistance, because that was Friday, little zone there. Okay. And so if you miss this move, you either need to be I don't even really like it for puts because you're catching a 20-cent move down. And even with 4 days to expiration, you get a weekly. That's not going to pay a lot. If you buy an 89.50 put, you can make some profit. That's probably not a very big payday. So for me, I would skip puts to this profit target. And instead, I would buy dips here as a day trade and see if you can get some bounces into here, into this zone here. Or if we kind of open this zone here, say we kind of, again, I don't know if we'd be slightly bearish or whatever you want to call it, pre-market, but if we kind of get this move down into here, you buy because these moving averages can be stacked. So 89.67, 89.8, you buy that dip. You know, if you're the type that plays the open, obviously do with caution, go light. You don't want the first trade of your day to be a loss, but you use these moving averages in your favor because again, you know, there's no reason to go short at a moving average when we're dip buyers. When if we're options traders, but again, if I want to buy shares on XLE, where do I want to buy shares that is safe? And I'm using air quotes for you guys. What did we say? We had 5 things to be bullish on. On a chart setup may not be, maybe the end of the year XLE is not a good sector, but on a chart perspective, we got the 200, we got a trend line, we got support, we got 2 more moving averages here. As a shareholder, this is where you take your chances, and then you write it up to take some profit targets. But again, from a day trade perspective, you guys, it's kind of a tricky spot as far as the price action we need to chew through. But we take the dip here, you bottom tick some 89 or some 90 calls, 90 strike. Again, obvious sell. You catch the 50-cent move up to Friday's high, and then what do? Or before that, you need to zoom out already and have a trade plan. But now what do? We start looking left, and look at that. I didn't even know how that was going to line up, you guys. I just marked that zone. Look at that Friday rejection there. Again, you take calls there at 89 or at 90.50. You're like, oh shit, why did it reject? Well, duh. Big spot here, 90.50, you guys. So again, you bottom tick calls here, you better be selling, trimming at the very minimum. Small port people, you buy 1 or 2 contracts, you sell all, you be thankful for the good trade, you be thankful for the gains, you move on. You live to fight another day. Okay? Or we open here, you already know where I'm going. Breakout, retest calls, because we know we break this zone here on Monday, our stop loss is easy, you guys. This looks like, if I do this on my chart, you go, oh shit, that's a big stop loss. I don't know if I want to hold for that. Look at this move, you guys. You're risking 10 cents down on the stock. So 90.50, 90.40 basically. You're risking 10 cents down on the stock, that is, as a stop loss. And you're looking for all this price action here overhead. So when we talk about risk reward, you guys, spike, day trade, scalp, we're talking about risk reward. We're risking 10 cents downside on the stock to anywhere from 50 cents upside. Where do we keep going? $1 move upside to $1.50 move. That's risk to reward, you guys. You're risking this, and your reward is this. I mean, we may not get it. This is your reward this week. So you bottom tick 90.50 and we stay above it all week. This is your reward, and your risk is small, you guys. Keep it small, make it obvious. So when we cut below, you go, oh, 11% loss, 12%, no big deal. Like, these losses should not piss you off or make you mad because it's obvious. We reject here, we're probably going to come down again. Maybe the market's bearish. You take calls where it's obvious. Okay. Let's see. Sorry, Raphael. How do you choose expiration on ranges like that? I'm assuming that's XOM. Let me know in the chat if you're still here. So yeah, if we're in ranges, brother, yes, on XOM, I'm day trading this. I don't care what it gives me. We push up, and tech is rejecting. Hypothetically, tech is rejecting tomorrow. XLE is rejecting as well. XOM's probably going to follow. That's where you take your puts at spots where it's obvious. And same thing, you guys. We push over 117. Your stop is small. Your percent loss is small. But Raphael, to answer your question, I'm day trading this zone until we break out. as long as I have time. I'm not gonna lie, if I buy a put here on Monday and we reject and I sell 8 of my 10 and we close down here and I'm holding 2, I'm not gonna lie, if I got time, I would probably swing that into Tuesday to try and get this price target down here. Okay, but only if you trim and only if we close down. So a thing on swinging, you guys, again, we buy puts, we reject, take some profit here, take some profit here, take some profit here, and we close down here and you have time and you trimmed, that's where you get the green light to swing. Okay, but if you buy 10 contracts, we come down here, you don't sell anything, you bounce. We come down here, maybe this middle zone, and you don't sell any. And you're still holding 10 contracts, and this showed you 35, 40%. And then we close here, and you're like, well, I'm only 13% green. I'm going to swing all 10. This, when we get a close like that, a close into this zone, that's stupid. You don't swing just because, oh, I had a meeting, oh, I forgot. That's stupid to swing here. You swing when you trim down here and you get weak bearish closes. That's where you swing and you take profits down here. So people that want to swing or try to swing, it has to make sense. You cannot get emotional on swings, you guys. If the trade does not work in your favor, like I cut trades or I stop out, like I tried to play XLE this day down here. I bought one of these days. I bought off the 200. So I don't know where it was, you guys. I bought somewhere. It's in the chat. I didn't get the breakout I wanted. I sold for 8% profit. 8%. That's fine because you know what? The chart was rejecting here. The chart told me, hey, the breakout is not coming. Sell. Okay. So I trade based on the chart. Do not get your emotions in it. I took an 8%, whatever. But you know what? 8% is better than 40% red. You know, if I would have swung this, yeah, obviously it paid in hindsight. But if we would have broke down here, I would have opened, 30, 40% red. That's not fun. That's stupid swing trading. All right. I think that is, I got one more. And then I see, sorry, I'm trying to watch the chat, you guys. I have to speed things up because I always go long. Let me look. What was it? I seen it in the chat. ASTS. ASTS. I have no idea what this is. Space Mobile. Space Mobile. Is that a cell phone or is that like space stuff? What do we got? Okay. Viral. Yes, we're definitely going to go over Tesla because I have some thoughts on Tesla. All right. ASTS on the daily. I don't know what you guys are in, but I will be non-biased. I'll give you my perspective. Let's check. Is this all-time highs? Yep. Is this thing running? Yep. Okay. Couple things I hear, or a couple things I see, a couple things I hear is the dog for sure. This is kind of nice. When I don't see a chart I played, it's a nice fresh mindset. Okay. I'm tagging a line here at 33.15. One could argue probably 33 zone, but to me, okay, why, fresh chart, never tried this before, 33.15. Why did I do that? Reaction here Friday, reaction last week, reaction last week, reaction last week over that, reaction last week under that, the big sell, and previous to that, big rejection. So for me, one line chart, actually a 2 or 3, one line chart on a support. And then we kind of got this going here. This is going to touch, sort of. We'll make it wonky, whatever, just for the speed of class. And we're going to kind of do this. It's not perfect, but we got this here. I'm on the 1 hour chart, you guys. For me, 33.15, 33.15 is all that matters. If I'm a day trader, swinger, whatever, we hold 33.15. Cautiously, that's the green light for calls. You got a trend line overhead that is, once you hit this high, 1, 2, so you got to think, okay, we're going to push into, we'll call it 35 flat. 35 flat is going to be kind of a little pivot zone here. 35 plus a trend line. You catch this bottom tick on calls, you better be selling there. Do not buy calls here expecting a trend breakout and we reject and you hold calls like a dummy, 2 cent or $2 drop. Okay. breakout retests off 35 all day long. But trend line rejection, we start slicing this bottom trend here, and we start getting closes here. You know what I'm going to say is, to me, if you want to, I'm not saying if you're bullish or bearish, but don't make trading hard, you guys. If we start seeing that, do not keep adding to puts. When we start seeing this, we get a daily 9 that kind of trickles up like this, and we go like this, and then we get the crossover, and now the daily 9 is under us, or overhead, overhead. That's going to be resistance now. So if we slice 33.15, we got the 9 overhead, and we got this trend line that's already rejected already, hypothetically 4 times. I'm not a call buyer under 33.15. I'm bearish for sure, because this is going to reject until it doesn't. Okay, do not time the breakout. Oh, failure. Time the breakout. Failure. Try to play the breakout. Failure. Now we're under a big support, which is now resistance. Oh, breakout. It's okay to be bearish when it tells you, guys. Like, if you're in calls and you tried the breakout, just sell. Sell for a loss. Ride the puts all the way down, because the whole time that, let's just say we come down into 28, whatever. The whole time you're adding to calls, adding to calls, adding to calls, you could be taking this $5 move down on puts and making way more money than using all that buying power. Now you have no buying power. You're tied up in this, trying to catch this breakout. Okay. Sell when the chart tells you, guys. Do not get your heart, do not get emotional into this. Okay. Tesla. I think I need to zoom out because I have the same thing I'm watching here. Tesla. Virally still here. Tesla. I am on the 1 hour chart, and I am watching this. This is not all that matters, but this is the main thing, you guys. Tesla. I'm going to zoom in, but I just want you guys to get a perspective on Tesla right now and what I'm seeing. Trend line. Big old trend line. And I got some price action here. I don't trade Tesla a lot, so I don't have a ton of lines here, but that's right. It gives me fresh perspective. Let me make sure I like that. 221. 221, 210.60 are my immediate 2 levels and a trend that I'm watching. Okay. 210.60. That was Thursday. You buy puts, you're getting smoked. Big reaction here. Big reaction over. Big reaction under. You get the point. That's how I chart, you guys. 221 flat. You see this reaction zone here. I probably need to zoom in for you guys a little bit. 221 under, big rejections, over, big push, under, rejection, big push, bounce, under, selling pressure. Okay. So or you probably can figure out my trade plan tomorrow. This one is kind of nice, kind of not. Okay. Again, one last zoomed out look before we zoom in. Let's go to 15. Okay. My trade plan on this is going to be kind of simple. Pre-market. We do this little diddly here. We break out. What did I say? 221. Watch that zone. You know what I'm going to say? Break out, trickle down, chop, come down here. You take calls at 221 every single time with confidence that old resistance is now support. Resistance is now support. If we're under, it's still resistance. Okay. Again, make it easy. Make your trade plan easy, you guys. This is a easy trade plan for me. Friday, easy trade plan. Okay. The shaded area is your stop. We break under, that's your stop. Okay. To me, when you take calls on a bounce, you cannot freak out at a little bit of red. Okay. I'm not sure what percent this is. This might, okay, let me backstep. The percent might be too big of a risk to hold, but the chart should tell you to hold. Okay, why does the chart tell you to hold? Because, damn it. And I'm not good on charting it, sorry. Oh, Lord. We really screwed up now, Bobby. There we go. We're back in action. All right. Also, if anybody knows why does that change, let me know. All right. So we come down into here, you guys. Let me get some drawing going because that's how I like to work. You take calls here. We trickle down. We're 25, 28, 20% red. Okay, red, yes, it sucks, but let's look left. You have to assume this zone here, it's probably 220.7-ish. You have to assume there's going to be first touches. We're going to see some bounces there. Okay, but if we don't bounce and we just slice through that, yes, you stop out of calls there. You accept the loss, and now you look for, you guessed it, breakdown retest. Now you be a bear, or at least that's how I trade. You be a bear because we sold down through support, which is now resistance again, same spot. Because when you play a breakdown retest, what you're looking for is this exact same price action from Friday. You're expecting 221 to reject, and if not, again, the opposite trade plan. Your stop loss on puts now is easy and obvious that if we break over, accept the loss on puts, and we might be bullish the rest of the day. Okay, does that make sense, everybody? I know you guys like to trade Tesla. So again, if we trickle in pre-market, my trade plan on Tesla, if I were to trade it, is easy. Like, I'm probably not going to take it at the open. It's Monday morning. Again, I always say it, markets are open 6 hours a day, 6.5. There's no reason for me to trade the 5-minute opening candle. If we trickle in here, we get some wicks, we buy up. We don't break out, we buy up. We consolidate on this 221. I'm definitely looking for a breakout sentiment on this for sure. If the rest of the market's running on Monday and Tesla's not, I'm definitely looking at that consolidation breakout over 221 on Tesla. Oh, did I miss anything? Otherwise, I want to go over a couple things I'm looking at. We might go long on this lecture, guys. We got 50 minutes left. You guys can run. You guys can leave in 50 minutes if you need to, but stick around if you want. Jonathan, CLSK. Sorry, CL. That's is that crypto stuff? I think. I'm not sure. Or is that? Oh, is that clean energy? I can't remember. Can't remember that name. Let me know if you're still here. Interesting. I'm on the daily chart, guys. Fresh perspective, easy chart, easy line to mark right here. I'm on the daily. I know when I see this price action pushing, I see this recent price action here. I see a gap up rejection. I see rejection here. Daily chart. I don't want to spend too much time. I bet that 1268. If you want a round number, 1268 to 13 flat is a big number. Jonathan, if you're still here, I'm going to zoom in. This is the daily chart. Build you a trade plan. To me, I kind of already know what I see because, again, trading, you guys, maybe it's experience, but I don't spend too much time on it. You see, I mark a level and I ride with it, and I'm off to the races. I'm going to build a trade plan. I try not to overanalyze things. I go with what I see and I run with it. So 1268 zoomed in. The daily 20 is this green step. Okay, you already know what I'm going to say, how I'm going to say it. So we see in the daily how those moving averages were curling under. Well, those are those moving averages, you guys, that are zoomed in. Okay, so we open here and we chop. Calls with time, 1268. You take that 13 call, you get some late September swings, late September time, whatever it is, whatever you want to do. You buy dips here because you have a moving average, you have a support, and you have this 9 that's going to be, as long as price action moves up, you're going to have this daily 9 moving average underneath it. Again, we talk about swings, you guys. When we get moving average under that, that's where you ride that. That's where you ride that move. Okay, so for me, Jonathan, if you're looking to be bullish, try and stay bullish on 1268. But again, we see, even on our zoomed in recent, we see what 1268 does when we get under it. Okay, when we get under 1268, so pre-market, if this is our pre-market price action here, let's say this is Monday, I'm not buying 13 calls at 1268. We see this reaction here, you guys. We see this reaction. So again, if you're trying to catch that breakout and it's failing, don't be a dummy. Don't hold. Like, you're just a very, very small fish in a very, very big ocean of traders and big money. Like, they don't care about your 20 contracts. They don't care about your 50. They don't care that you want it to go up. If the market is not ready for this 1268 breakout, do not fight it. Be a little bit bearish. It's better to be bearish under 1243. Why is that? Because you have this reaction from last week. We open below 1250 or we sell down. Like, I'm okay being bearish under 1250 here because we see this price action from last week under 1250, these nice moves we get. You get these moves, you get these big price targets down here. Okay. Do not buy calls here. Hold, average down, average down, average down. Now your buying power is, shoot up. You're deep red, but your neighbor next to you, he's going, oh man, I'm making so much money on these puts. I caught a dollar move down, or dollar 25 move down, whatever it is. Don't get emotional, you guys. Again, this is day trading perspective. Again, we get closes over 1268. Swing some calls. As long as you trim, swing some calls, you guys. All right. CMG, I think that's Chipotle. It is. Quick drink of water. Ooh, I already know what I'm seeing on Chipotle. Same thing. Let's zoom out, see where in the hell we're at. Similar thing. You guys remember that Exxon chart? Chipotle. Fairly easy chart to day trade. Fairly easy chart for swings. Okay. This yellow line on the daily is your 200 moving average. That's going to be very big support until you get, or excuse me, very big resistance until we get over. Okay. So always, if you guys are not on Thinkorswim, you can't do this multi-time frame moving average. Start the daily, you guys, each day on CMG, and go to that slap on the 200 moving average on the daily, and you have to mark a line because it probably won't do this for you intraday, but that's overhead, and 54 is overhead. Okay, so two reasons for me not to be bullish at this zone. So if you're late to the party trying to buy this breakout, you're late. That's two reasons to not be bullish right here if you're late to the party. If you got calls down here, you trim at this spot. Okay. If you want to short it, you have two reasons to be bearish right here. You have price action here, rejection. Friday, rejection. Last week, rejection. Earlier in August, big reject. You guys get the point. Okay. Until 54 breaks out, I am not swinging calls. Until 54 breaks out, I'm not swinging calls. Okay. I don't care if you have October calls. We could chop this range and you're going to be pissed. We push up. Oh, I'm green 5%. I'm red 40. Oh, I'm green 5%. I'm red 40. You're going to be pissed that you're not day trading this and you got money tied up on November, December contracts because you didn't wait. Okay. What you do is you get a breakout. You already know, a retest, because now this daily 200 is underneath you, 54 is underneath you, and guess what? Your 20's curling and your 9's curling. And now you have 1, 2, 3, 4 things to be bullish on, or excuse me, four support levels to be bullish and swing on. Okay. So 54 is our ceiling until it's not. Don't try and be a wizard. It doesn't break out until it breaks out. Guys, all you got to do, you literally, I'll even do this. I don't trade this. Set an alert. If this fires tomorrow or Tuesday, whatever it is, I'm going to get an alert and go, hey, I should probably look at CMG. And guess what? Come down here at, you want a round number, call it 52. You want a closer number, 5183. And guess what? Same thing. We come down into here, 5188. I'm looking for some bounces on the hourly, on the 30-minute. You know what? I'm going to be a call buyer because I'm buying off support until it fails. I'm shorting 54 until it fails me on a breakout. Okay, calls here, 52. We got a $2 range, you guys. If you guys are day trading this and you catch puts here and you catch this move during the day, or it's a little bit slower mover. I don't know if it's going to move $2 in a day, but you swing that. That's a nice range, you guys. Play that. Like people hate getting, when you buy calls here, you hate seeing this, but as a day trader, man, I will take this every single day. I will trade a $2 range, calls down here, puts up here, calls down here, puts up here, calls, put. I will take this. It could range for a year. Like think of it ranged for a year. It's not going to. Think of it ranged for a year and how easy that would be to just boom, 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 boom. Do not predict a breakout or breakdown until it happens, you guys. Okay. Zoom out for, yeah, definitely. Let's zoom out. Yep. I like it. I liked it. I mean, even how far back? This is September 2022. Okay. So even for me, Chipotle, someone check me on the financials. If it's a good company, you want to be a share buyer, you want to catch swings, you want to catch a move, this is it. Thank you for telling me to zoom out, Viral. I'm on the daily now, guys. Like people are like, oh man, how do you catch 40% on, I don't know, percent of this we're about to find out, but you want to catch some swings on shares, this is how you do it, you guys. Break out of 54, or you can buy share, because shares have no expiration. I mean, they have, obviously a stop loss in your percent. Say you buy shares at 54 tomorrow. 1K says get bearish under 52. Okay, whatever. What do we risk on shares, you guys? I'm risking 4%. Is it okay to take a 4% loss on shares? Absolutely. I'm not saying cut at support, but let's say we come down to 50, even 49, 48. Worst case scenario, you guys, on shares, if you buy tomorrow, worst case scenario, 11%, 10%. That's nothing, you guys. To me, taking a 10% loss on shares, that's a reasonable stop loss. Okay. We catch the breakout of 54. Let's ride this to 70. What's our reward? Hypothetically, obviously, let's trim here at 58. Boom, 8% profit. Catch this moving to 63, 14.5%. Catch this, what I think was all-time high to 69, 22% share flip, you guys. That's how you do it. This is the daily. When you get all these moving averages stacked underneath you and we start trending like this, see how this purple line is coming down, straight line, whatever. If that purple line curls, hypothetical, and that purple line does this, you ride that trend until it fails. You ride that trend. Again, shares, you guys, you don't care about a push up and reject on shares. You ride that trend all day long. Okay. Hopefully that answers your question. All right, guys. It is 1 hour. If you guys need to leave, go ahead. I'm going to skim over. Unfortunately, I got to skim over a few, but I want to point out a couple things that I'm seeing on big tech. Tesla, we went over. Apple, same thing. Apple, you guys, I had a member, not saying they're trying to play the breakout, but they had questions on the breakout. And I said last week, and this was in DMs, I said, slap a line at 227. Slap a line at 227 and tell me what you see. That was kind of what I said to them, okay? Same thing. Apple, let me zoom out, sorry. This is the daily. You guys are day trading, swinging, whatever. You're buying the 226 call. You're trying to play the breakout all week last week. We reject 4 times. Why the hell won't this break out? Okay. Look at this shaded area, you guys, and zoom left. Okay. Look at that. So what I always say, if I bought shares here at 227 back in July, let's say I don't want Apple long term, but I didn't sell. I didn't sell a little bit of profit here. And I get all this big move, this big scary move, whatever, in Apple. And now we push up. What am I going to do when I've been red, and I get back to 227 on my shares? Whew, I'm back to break even. I'm selling. What do you think is going on here? These are sellers, whether it's big money, obviously it's big money moving this, but even the little guys. If I buy here, I'm finally break even, and I want to get rid of some money, or I want to free up some money. What do you think I'm going to do? My sell order is 227. You're damn right. Okay. This shaded area, it's no accident why this is rejecting here, you guys. No accident. Okay. So 227, if we quote Dirty River, is my line in the sand. 227. That's all I care about. 227. I guess 228 to be more precise. Daily closes over 227, but day trading. Now I'm going to zoom in, you guys. Here, I'm going to zoom in. Okay. 228. Big wicks, 220. Yes, we push. So if you catch this dip buy, which I think you should try it off 226.85, and we push, you better be selling into 228, because we rejected 2 previous days. Why are we going to break out tomorrow? Why should we? Okay. If you're in 1 or 2 calls, what am I going to say? You take your gains, you be happy, and you hope for a 228 breakout and a retest, and you take calls re-entry at 228, and you take the 229 calls. What you don't do, you don't bottom tick calls here. We push up at 228, and then you get this candle here on the 1 hour, and you go, shit, I just gave up 35%. Now I'm break even. Now I'm 10% red. Now I'm 25% red. Well, I guess I'll cut now. That to me is horrible trading. Okay. That's my bearish thesis. Be cautious, but you can buy dips because you've seen it worked Thursday, it worked Friday. But to me, I want to see a clean breakout, especially on swings, you guys. You don't take swings and start swinging here and think we get a good close and we gap down our 227 again. Okay. And so we open here, you already know. 227, let me shrink this, move it down. To me, you're trying to time a breakout. To me, easier, again, calls can pay, yes. But we open below here pre-market. I'm shorting that every single time at 226.87. If we kind of half-ass it pre-market and we just kind of trickle in, we push, we get a rejection wick, we push, rejection wick. I'm getting puts here, probably 226, and I know over 227, because again, if we break out and push up, we're probably going to go for more. But that shaded area is a realistic stop, basically 227. So again, oh, it looks like a big move. You're risking 15 cents stop loss to $1.20. That to me is to be a final profit target, price target down here, because it's going to pay down into 226 for sure. But we break down under, and guess what? Exxon, what was it? CMG. Kind of the theme of tonight. We're back in a range, you guys, back in a range. But if this breakout fails and this daily 9, this purple starts curling up, that's where you swing calls cautiously, knowing that you think or you hope or you expect 227 will hold. Because old resistance should now be support. This will be support until it's not. Do not fight it. Donnie says 222 put. That's $5 out of the money. I don't know the delta on that. You guys, quick trading Greeks lesson. When you're buying an options contract, the delta, surprise, we're in Weevil. When you look at an option contract, you guys, quick 30-second lesson. The delta, DELTA, that number is that number, it tells you two things. If you make a $1 move, so say, okay, what are we on an Apple? Apple's, say you buy Apple right at 227 flat. You take the 228 call, Apple. So Apple comes down at, you can't take the 228 call. You got to get the 227 call. Okay. For speed of the lecture, if you buy at 227, let's just say this is 228 call. If you take a $1 move on the stock, so you bottom ticket 227, you take it all the way to 228 on the stock. Okay. The delta tells you a $1 move. That's what that delta tells you. So you're going to make $48 on that contract if you make a $1 move. So going back to Don's question, it also tells you percentage chance that it ends at expiration in the money. So tomorrow, again, this is 227.5. Let's just pretend it's 228. You have a 49%, 0.48. You have a 49% chance that this closes in the money. Okay. So going back to his question, what do I think a 222 put? So for me, I literally do this when I look at probabilities of a contract. Can a 222 put pay if you buy it right at 227? Yes. But again, going back to this chart, this move, if I make my candlesticks big, oh, it looks like a big move. This is only a $1.20 move down. So yes, it made a $1.20 move down the stock, but your 222 is still out of the money. Okay. So we made, again, quick math. We made, let's just say 226.85. We come down to 221.85 for quick math, you guys. So Don is in, he buys puts here. He gets a $1 move now. What is his puts going to pay him? His puts are going to pay him $23. Okay. So they paid him $23. Doesn't matter if like, oh, that move looks big. Option Greeks are going to tell you how much you're going to get paid, you guys. Okay. And so it's going to pay 23 bucks. But if he would have got the 225, yes, it's more money, but it's paying him 30 bucks, $36 a contract. Okay. So you guys, quick lesson, you guys buy those wild SPX puts and calls or whatever it is. And you're like, shit, it's making a big move. Why am I not getting paid? The delta is telling you how much you're going to get paid. Okay. All right, guys. Meta. We went over this last week. We talked about this shaded area. I know we did because I marked it and I have a chart that says OOT. Meta did not make new highs last week, you guys. Meta. This is the 1 hour chart. Okay, 1 hour chart. Shaded area, 1K. Why do you have that shaded area? Let's go the daily. We're on the daily. No, I mark levels for a reason. Look at this. This is back July 5th, price action. We pushed. Let's just look big picture, you guys. Call 540, the ceiling, whatever. Let's just get a game plan going. Just big picture. Let's just call 540 the ceiling. We see when we get under 535, what happens? Daily time frame. Okay. Push up. Yes, we pushed. Yes, calls would have paid to 540, but ultimately daily closed. We see the reaction. Okay. Let's zoom in and why I'm looking at Meta, why I want you guys to look at it. This is, to me, a fairly easy chart, fairly easy trade plan. This is the 1 hour chart. If I go the 15, the 30, it's all going to do the same. Again, this time axis zooming. Why is this not saving? Is anybody smart? Why is that not saving? I don't want all the extra shit over here. Anyway, all right. Meta, last week's price action, you guys. That big shaded area we saw in the daily time frame. Push up, rejection. Okay. Pre-market. Yes, if you bought that at the open, you got paid on calls. But guess what? Puts paid more. Sorry to say it. Puts paid more under 540. Friday, push up. This is a 1 hour candle, you guys. This is 1 hour of hard selling. We pushed up. This 1 hour peaked at 540. What did we do? We sold down. We bounced the daily 9. And look, we closed under the daily 9 moving average, guys. This purple line. Why do I want you guys to look at Meta? Why Meta? Okay. Let me extend this because 529.87, 530, quickness of charting, that's what it's going to be. Old support, you guys know the theme. Old support is now resistance, okay? So 530 plus my daily 9 is going to open here. We push up. I am not a call buyer right here. I am not. Breakout retest. Yep, I'm buying calls here. Breakout retest. Don't chase the move. Breakout retest. I'm not a call buyer. We push up. Reject. Push up. Even better, we push up. The opening range is set. I'm a put buyer 100% every time, 10 out of 10 times, because I know my price action here. Hypothetically, Monday, if we push up, reject, this spot here, this is Tuesday of last week. This ideally what you want to see. If we push up into 530, this is what you want to see: price action, profit targets, rejections, bearish, whatever you want to call it on Meta. This is what I want to see, this Tuesday price action. This would be my game plan Monday if we reject here. Okay. Meta is a fairly easy chart to trade because it gives us, again, a nice range to trade off of, you guys. You buy the 529 puts at 530. Again, 529 flat would be a profit target. And, these price zones here, my final target, 526, because again, that's the bottom of the range last week, roughly. We got this price action Tuesday, but ultimately bought it up. But 526, if you catch a day trade, 526, final target for sure, 100%. Okay. Last two cheapy names. What am I watching? Oh, I'm only going to go over two. I got to pick 2 out of the 6 I had wrote down. Let me make sure. GM's a little funny. Do I want GM? Do I want PayPal? Let's go with PayPal, you guys. Had another member. PayPal 62.71 is your ceiling. 69.64 is your floor. We go the daily. Why? Man, big rejections last week. 1, 2, 3 rejections, 4 rejections last week. Why is 62.71 not breaking out? Why is it not breaking out, 1K? Why is it not breaking out? Well, because July of last year, 18 months ago, or sorry, 13 months ago, this is the price action. Again, you know my thesis. You buy shares at 73 and you hold for 14 months. You have all this money, but oh, shares, no expiration. Oh man, huge relief. Hold for 13 months. Where are you going to sell your shares at? Break even every single time at 73. Okay? If you're a day trader and you're trying to play that breakout, you're doing it wrong because we know what happens at basically 73. Okay? Do not fight that. Do not be late to the party, you guys. What you can do. Okay? So let me get a bigger time frame here. What you can do and be a good trader is you buy this support zone here, this shaded pocket, we'll call it. Call it demand, call it support, call it whatever you want. 71.40 into 71.50. A very nice zone here. Why is it very nice? Because when we're over, we see the reaction candles over it. Yes, we sold down through it, but guess what? Bought back up. I think this faked me out that day last week, actually, in puts. Anyway, we see the reaction over it. We see the buyback over it. Tomorrow, you know my plan. If you trade PayPal, you buy those dips into 72, 71.50, you take the 72 call, and then you bottom tick, you sell here. 100%. I mean, I guess if I had leaps, maybe I would hold, but if I'm a day trader, short term, anything less than 30 days time, I'm selling all my calls there every single time. I don't care if it's a shit move and it's 14% or if it's 86%. That is where you sell. That is your weekly range from last week. That is your last year's range. You sell every single time. Okay. On the flip side, if we trickle in pre-market moves, you know where I want to be bearish. I'm not going to take it at the 5-minute candle, probably not. I want to see, hey, are we getting some rejections on the 15, the 30, the 30 minute? Yep. And I'm taking the 72 puts or the 72.50, whatever's available and good open interest. That's what I'm looking at there. That's what I'm looking at. Okay. If we're in this zone, we open under this zone, again, an easy trade plan. Pre-market, we open, we trickle down. I'm cautious on puts here because unless you catch a perfect put entry here and you bottom tick this zone here, unless you bottom tick and you saw all your puts here, if you trickle down here, we start chopping. I'm going to get cautious that they're going to buy it back up and push over again. So PayPal is definitely one to watch because you guys, this is consolidation, accumulation, so to speak. And what happens when we range and a breakout happens? What happens when they accumulate hundreds of thousands of shares in here and we break out 73? What do you think is going to happen? Big move. Big move. So again, set some alerts, whatever you want to do. Don't buy calls here at something rejected 3 times last week. Breakout, retest if you want to be a bull. Okay. All right, CRM for viral, and then we're gonna end this chat, you guys. Let me get a level here, 266.5. Then we got to end it, you guys, because then my lecture is going to go 90 minutes now or whatever. Wait, sorry, 266.50. Damn it, taking this up. Oh yeah, Big resistance, yes. And viral, if you're still in here, not only is it big resistance, probably in the daily, let's check the daily. It is. Okay. And now, remember when I said that? So look at this yellow line, you guys. When you get long over the daily 200, you get long, you stay long. Under it, you see the rejections. Under it, you see the rejections. Look at this. This is like a no-brainer as well. So we push into 226.50. We also got the 200 overhead. Absolutely. You can short this with a small stop loss. You know, they break over and hold. Now, guys, when I say a break over, I'm not talking a 5-minute, 2-minute candle. Like, to me, that means nothing. I trade on the 15 and the 30. When I start seeing an hourly rejection candle, like if I start seeing this wick here on the 1 hour right here, I'm holding puts with confidence. Absolutely. If I only took a half position, I'm scaling in full position every single time. I got the 200 overhead, it's rejecting because this is going to reject, you guys, until it doesn't. Yep. All right, you guys, I think I need to end the chat here. Otherwise, it's going to go long. Marina, for swings, you look at the 15. No, Marina, I'm on the 1 hour, the 4 hour, the daily for swing setups. But for me, you guys, I'm on Thinkorswim, so I can chart daily moving averages intraday. And so, yes, I can check the daily and go, okay, where's the 9 moving average? But, you know, intraday, it tells me on the chart, you guys, where it's at. And so that's an extra step I don't have to worry about. But you guys, I need to end the chat. DMs are always open. Send me a DM, you guys. Say, hey, I'm looking at CMG, or I'm looking at Apple, I'm looking at Tesla, whatever it is. But you guys, you know me, I'm kind of a hard ass. I'm going to say, hey, what's your trade plan? Okay. Don't just say, hey, can I take Tesla puts here? I'm going to say, sure, take Tesla puts. I'm going to say, what's your entry? What's your stop loss? What's your profit targets? And then I'm going to say, good job, let's go. Or if I like it, I'm going to say, let's roll. I'll get them with you. But don't just say, hey, man, should I take Tesla puts here? Because that just tells me you're following something on Twitter, or you're looking at a 5-minute red candle on Tesla and you want to get puts and you have no trade plan. But you guys, you have to have a trade plan, especially if you send me a DM. Not to be rude, but it's like I waste a lot of time with people with no trade plans and they blow their port up. And I say, hey, did you take those Tesla puts? They say, yeah. And I say, oh, you know, Tesla's at whatever it is, 221. Oh, did you stop out over 221? That was our stop out, you know, because earlier in the chat, I said, yeah, I'll stop out. And I find out 2 days later, no, I'm still holding, I'm down 68%. Okay. And so stuff like that, you guys, don't waste my time. Build a trade plan. If you guys have a trade plan and a legit trade plan, I'll spend countless minutes, hours, whatever it is in the chat with you guys in DMs, because I know it shows me you guys want to learn. But a trade plan's simple. I want Tesla puts at 221. My stop out's over. These are my profit targets, 1K. I'm going to say, love it. Okay. And I'm going to say, hey, we went down to 219. Did you sell some? I'm not going to say, hey, send me a screenshot. I don't expect you to reveal your port information, but you guys better have a trade plan every single time. Okay. Again, you guys, DMs are always open. Take it slow on Monday. We got 5 days of trading, just like normal. 6 hours of trading tomorrow. Don't take the opening 5-minute candle. Take it slow, you guys. But with that, I'm going to end the chat, you guys. I appreciate you all. Let's have a great week.